Gold is one of the most popular things retail traders absolutely love to trade, and for good reason. It moves a lot, and if you catch the right moves, it can be a very profitable thing to trade. In this video, I'm going to give you a high-level view of how to trade gold more profitably and some things to consider in your analysis before you start placing trades on gold. Let's jump in. So it's no question, if you've looked at a gold chart before, you know it can be very, very volatile all of a sudden. And before we dive into a bunch of trading techniques for gold, I want you to understand something about the very nature of gold. Gold has been used for the last, 5,000 years as a store of wealth used in commerce throughout the ages. And the reason I bring that up is that it has a unique trait that I think nothing else in our humanity has. It has stood the test of time as a currency in a form. It is a way to store money, and every other fiat currency in the world has never long-term existed without collapsing. And that may sound weird, but you can look into, like, for example, the German mark, which was around for a very long time and was hyperinflated at a point. The point is, gold has a very unique trait in that it is what many traders or investors consider somewhat of a safe haven asset. Now, it brings me to my next point about trading gold. And again, you need to understand the story or the concept behind gold before you jump into charts. Gold has sudden impulsive moves. And to show you this, I'm going to show you a weekly chart briefly. And I'm going to talk about the three recent highs that we've seen on the gold market. This is 2020, this is 2021, and this is recently. All three of these peaks, I want you to understand something about this. This 2020, we all know what happened. We had the COVID, right? COVID pandemic. Okay. Well, what about April of 2022? The Ukraine situation. They were invaded by Russia. And finally, we have this recent one. What happened in March and April and May of 2023? Well, the bank system in the United States, there were some collapses. My point with bringing this up is if you notice a pattern here, in all three scenarios where gold spiked back to very high levels historically, they all occurred during crisis events, terrified situations in financial markets and around the world, and there's a good reason. Gold tends to spike on fear. This is something you're going to need to know if you're going to be trading gold. Gold tends to do well in a fear-based environment. And on top of that, I want to talk briefly about the technicals of gold. Usually, my approach to trading gold during times like this is basically to be a trend follower. Okay, when these events are happening and markets are being very fearful in nature, and markets are the gold market is rocketing. Many traders have found themselves on the wrong side of this trade and very much wished that they were not. And this wouldn't be the first time. There's many periods of times where gold throughout history has ginormous run-ups. This one makes sense. Many of you guys are familiar, of course, with the 2008 financial crisis. 2008 from 2011 started one of the biggest bull markets that ever occurred on the gold world. Of course, silver also followed suit, but this video is especially tailored to gold. Now, the next thing I need you guys to understand if you're going to be trading gold is we have to pay attention to the good old Dixie.
Sweet Dixie champagne.
Or the DXY, or as better referred to, the dollar index, the US dollar. Of course, when we look at gold, it is quoted in US dollars. So now what I'm going to do here, and feel free to do this on your own chart when you're doing this, is I can actually compare this to DXY. This is the dollar index. And what you're going to notice here is that generally speaking, when the dollar is moving up, gold tends to move down, and when the dollar is moving down, gold tends to move up.
Again, it's like poetry, so if they rhyme.
There's a number of reasons for this, but the basic idea is essentially because it's quoted in dollars, if a stronger dollar exists, of course, that purchasing power is stronger, so you can buy, more gold for the dollar kind of thing. And that's not just for US people, but of course for globally, the US dollar is still sort of the global reserve currency. And so when people buy gold, they usually buy it in dollars oftentimes. So the point that I'm trying to make here is that if you're going to trade gold from either a fundamental or a technical perspective, I think it's very important that you keep a close eye on what's happening to the US dollar. Now you can always pull up the dollar just by, again, searching up DXY. This is the dollar index, and it can be a very useful tool to analyzing the markets. So perhaps when you're taking a look at gold, maybe you take a look first at the dollar index, as where this one goes, gold is generally going to move opposite to it. Now, I can already hear it. Some people are saying, Nick, sometimes gold and the dollar move up at the same time. And that is true. So please understand this is not a certain every single time 100% guarantee, but it is a general rule of thumb. Usually we do see prices move inversely to one another when it comes to the US dollar and gold. So that beckons the next question. What causes the dollar to rise and fall? Okay, so if we're looking at the USD, if we're looking at the US dollar and how it might impact the gold price, well, here's something that you need to be very aware of. Another thing that's going to contribute a lot to gold's upward or downward move is the dollar, and the dollar is very heavily impacted by monetary policy as well as economic health in the United States. Monetary policy is the first one we'll talk about. This is, of course, tracking what the Federal Reserve is going to do. I'll show you a very powerful gold movement that occurred in 2023. This year, we've actually seen gold skyrocket pretty strong as, again, monetary policy has been expected to start to loosen further and further, meaning that interest rates, which had been raised dramatically in 2022, which put a big damper on gold, that is kind of erasing now. We're starting to see the Federal Reserve back off from its monetary policy rate hiking, right? So rate hikes generally cause gold to deteriorate. This can be a bit of a confusing one because sometimes people see CPI, which is a measurement of inflation, moving up. And people say, shouldn't gold be moving higher on higher inflation? As oftentimes traders do pay attention to, inflation. They say, well, gold is a hedge against inflation. Inflation should drive gold to go up, right? Well, it's a little tricky because of what we talked about with monetary policy. If inflation is on the rise, it is likely that the Federal Reserve may need to act, meaning rate hikes. Rate hikes are not good for gold, right? Because again, that means monetary policy is tightening. People are going to be spending money less, and again, getting that under control. The inflation report. However, if CPI goes down, which is what we've been seeing here in 2023, it's not always the case, but usually when elevated inflation is occurring and we do start to see CPI start to move in the right direction, especially in core CPI and that sort of thing. Again, once it starts moving back towards the Fed's target of 2-3%, that can generally cause a rise in the price of gold. Okay, so these are things that you can consider when looking at gold. You want to pay attention to the dollar. Now, from a technical perspective, you may want to identify chart patterns that are occurring on the US dollar. So for example, if I was to pull up DXY and say, well, hey, maybe I'm looking at the 4-hour chart and I notice that, this overall trend is very strong to the downside, perhaps that is going to give me extra confirmation to look for gold longs. Because remember, a weak dollar could cause a spike in gold, which as we speak right now is kind of occurring. We see on the 4-hour chart, gold making a significant move higher. And this recently is off of the back of guess what happened, lower than expected CPI report. So the recent CPI came down less than expected, showing inflation coming down and cooling off, and that was beloved by the gold market. So if you're gonna trade gold, a couple things that I would highly recommend you to consider. Keep a close eye on the US dollar. Move with momentum, right? Usually I'm trading gold in the direction of the momentum and I'm not looking to fade the market. I find it very, very difficult to trade gold once it starts moving. And another tip I would say is that trade, for me personally, when I'm looking to trade gold, I'm looking for momentum to pick back up. When markets are moving like this, this is probably a no-go, nothing to trade here kind of thing for gold. However, if you're bearish on gold, maybe you're bullish on the dollar, for example, and the markets are moving clean, this is the sort of opportunity where I'm looking for trend continuations when it comes to gold. This would be an uptrend, right? Downtrends. I'm looking to go with the momentum when it comes to the gold market. Another thing, or another tip, is taking a look at what institutional money is doing with gold. And this is a very powerful resource that I'm going to show you. Give me 1 second, I'll show you. All right, so the next tip that I have for you if you're going to be trading gold is to keep an eye on what hedge funds, money managers, essentially what smart money is doing with the precious metal. There's a couple things that you could pay attention to in terms of big buyers or sellers of gold. The central banks actually also do report their holdings of gold. Physical gold is actually bought by central banks around the world, believe it or not, which is a very interesting study in itself. But right now what I'm looking at is specifically the COT report data. COT report data gives us a week-to-week look as to what institutional level traders, these are hedge funds, large speculators, asset money management groups, that sort of thing, and what they are buying or selling. And if we take a look at gold specifically here, at the time of recording this video, you can see that 76% of positions on the futures market, when talking about gold in terms of the COT smart money, the non-commercials, the hedge funds, right? They are very, very long on gold right now. Not just gold, but also the cousin of gold, silver. Maybe like the little brother of gold is silver. 76% of institutional money is on the long side of the gold market here. And the reason that that matters is if they're buying gold, these are the smartest people on the financial markets, right? Hedge funds on Wall Street, that sort of thing. If we can identify a pattern where they are buying gold, this could be a powerful resource to us. Now we can also scroll down here on this report that I'm looking at, which I will share details. It is linked down below in the description if you'd like access to the reports that I'm looking at. They're not free. But they are a powerful tool, and if you're interested, you can find out more information there. They're built by my company, A1 Trading, which is, of course, behind the scenes, behind this YouTube channel. One of the things that we do, we build software tools for traders. Anyways, we can take a look week to week as to what has been happening with the COT report with gold. So let's just highlight gold here for a second. So we'll just scroll down XAU USD and pull that up. So this is kind of giving us an idea as to what's going on over time. And this can be a very, very powerful resource. Another thing that you should be paying attention to if you're looking at gold is what retail traders are doing with the precious metal. What you'll notice is that right now, 80% of retail traders are on the short side of gold. The reason that this matters is that if retail traders are piling into a short position, that actually can warn of a huge potential move that's coming to the upside, as retail traders are usually on the wrong side of great trends occurring in the markets. So retail sentiment or retail positioning can be a useful resource as well. And again, remember, you guys can also get access to this data in the links down below in the description. Another one that I want to show you, I could keep going, but this is a big one, is seasonal trends. We can take a look at the month-to-month readings of gold, for example, and see, historically speaking, what tends to happen on each month. So what we've got now is we can see this is the month-to-month average. The blue column is the last 10 years data, and the red is the last 5 years data. So on the seasonal trends, we can see that, for example, in the month of August, we're expecting a pretty positive month for gold. In the month of January, we expected a pretty solid month, and we did actually get that. In February, you can see we kind of had mixed. We'd had pretty break even. In March, we saw a positive. And again, all of this data can be found using our company's tool, the Edge Finder, which will be linked down below in the description if you do want access to that. Again, these are all tips and tricks that I use personally to trade gold and highly recommend you consider in your own analysis. And again, remember, if you do want access to some of the tools that I showed here in this video, check out the Edge Finder linked below. Thank you guys for watching and have a wonderful rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern. broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.